BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
What's up, guys? It's Tuesday. We had a holiday weekend here in the U.S., and I'm in my Jensen Huang era, as you can see by the jacket. The market is red, in case you hadn't noticed, and we're going to be talking about technology and neo finance today. What else is new? It's Tuesday, January 20th. You may notice I'm solo. Andy's not here because he's surfing, and Hawaii has some great vibes that he had to attend to. So I'm going to be running things solo today on the roll-up. We've got an incredible lineup. We're going to get into some news and headlines in a bit. Biggest headline today is the market is red. The New York Stock Exchange, NASDAQ 100 is down about 2%. That's a landslide, demolished red market for U.S. equities. 2%. We eat that for breakfast, lunch, and dinner here in crypto. Unfortunately, crypto's down something more like 10% over the last 24 hours. And so we've got a reckoning to deal with as well. Privacy coins are shellacked. Monero's down 17%. Zcash down 8%. Bitcoin and ETH. Bitcoin's down about 4%. ETH is down about 7% in the last 24 hours. There's a couple of things holding up, particularly in the neo finance category. Canton is doing all right, and Sky is doing okay as well. But man, it's a bloodbath in there. So guys, stay safe. Don't get liquidated. You know, we're still in this like choppy crab zone where obviously, you know, we were up 125, dipped all the way back down. Things looked rough. Bitcoin was hovering in the low to mid 80s. ETH, you know, succumbed to that 3K level. We got a good bounce up, upwards of 3,300 and 95K on Bitcoin. It looked like we were going to rip to 106, and we're chopping. We're essentially range bound around that 90K mark and around the 3K mark for ETH. So we're not out of the woods yet. A lot of people are suspecting that we go quite lower. I've seen calls for 65K. I've seen calls for 75K on Bitcoin. Who knows how low ETH goes in that regard? I've also seen, look, we're going to go straight to all-time highs. You know, we're going to maybe take a quick pause at 106 for Bitcoin, maybe around 4K for ETH, and then we're just going to teleport higher because of all the activity that's happening in the legacy financial markets. There's things. Trump put more tariffs on the European Union. He's trying to acquire Greenland. He may use military force. It's a mess out there, guys, but as long as you're not using leverage, you're probably safe in spot, cozy in stables, perhaps, Always good to have some stables and dry powder in a choppy market and stay away from the leverage. In the meantime, we're going to be bringing you guys a great show today. So don't go anywhere. Um, Today we've got, let's see, who do we have on the docket? First and foremost, we've got Rand from Zama, who I'm particularly excited to talk to. They've got a very unique mechanism that they're going to be deploying later today. I'm sure they wish it was under some better market conditions so people felt like they had a little bit more dry powder to shove into this Zama pre-sale. I would certainly think it's still going to do well, and people are going to have their eyes on it, as am I. We were going to have Kevin, but he was unable to join. So instead, we're going to have Johan from Chainlink, the chief business officer. They recently announced that they're bringing the U.S. equities market, $80 trillion U.S. equities market on chain. It's about 2% less these days, but they're bringing equities data on chain to power the next form of tokenized equities. You guys have seen Lighter, you've seen Hyperliquid, and I'm sure you've seen the New York Stock Exchange also announced that they're going to be not just going into tokenization, they're also going to be doing 24/7 markets. That's what we're going to start with today. Let's bring up our news. What are some of the headlines here, Leo? Let's see what we got cooking, and we'll run through a couple of things before we get Rand from Zama on the show. All right. So first off, we've got a simplified crypto card infrastructure stack. Look, these guys at Archimedes do great work. One of the best data providers that's out there. We believe in this barbell approach, which we've heard from when we're discussing value accrual in the past. If you guys missed Chuck's segment as we unpack the Neo Finance market map, did a fantastic job outlining the barbell approach as it pertains to Neo Finance and in particular to stable coins. From the very beginning of the industry, and I'm sure this was true of previous industries to crypto as well, but when you're thinking about value accrual, usually the bookends, the two barbell ends of the spectrum is where the value tends to accrue. On the one hand, you have bare metal getting as deep into the tech as possible. And then on the other side, you have the consumer facing end user product. The consumer is what you want to own if you're looking at launching an app. Obviously, that is a much more distribution oriented approach versus the very deep enterprise approach that you can derive from a bare metal business model. We talked about this pertaining to stable coins. The stablecoin reserves are something where we think that there's still some room to grow. The issuers are here in the middle, and they're certainly becoming commoditized. And then you've got the stable coins and the apps by which they're deploying these stable coins. You've got Klarna, you've got PayPal, you've got the state of Wyoming. These are municipalities and companies with massive distribution through which they believe that they can spread their particular stable coin that is then powered by the middleware and the bare metal reserve managers. Still very early, but we believe this barbell approach, this value accrual model is the right heuristic to think about it. Think about Neo Finance in this way, and you can position your chips accordingly. We also see when it comes to crypto cards, we have a similar barbell approach. We've got processing on one end of the spectrum, and on the other side, you have the consumer-facing products, the funnel, if you will. In the middle, you've got the traditional stack, the issuing banks and the program managers. This is where we think that there's going to be some commoditization. And so the Visa, the MasterCards, the American Express, they're still continuing to do great business. On the other hand, you're going to get some new consumer-facing products, and that is where we believe that there's a lot of room for growth. There's also going to be some long tails through these consumer-facing apps, just like on the stablecoin side, right? You know, you can think of Uber, Airbnb, Walmart, Amazon, all of these, this plethora of apps that have meaningful distribution. This is where we expect a lot more companies to launch stablecoins. This is where there's a long tail, whereas the issuer side of things is primarily a game that's already been won by Circle and Tether. I personally don't anticipate any new issuers to break into this game, but I do think that there's a lot of stablecoin infrastructure products that are closer to the bare metal that are positioned very, very well. Again, probably only a few that are able to win the bare metal game. When it comes to distribution, several products are able to get distribution and meaningfully scale consumer apps. And I believe the same will be true of crypto cards. Let's keep going through because we've got a lot more to get through before we bring up Rand, our first guest to the show. So let's keep going. What have we got next? Man, Saylor was able to drive us to 125K once. What are we at now? Look, Saylor had to improve his execution. We're under 90. We're at 89,364. Bitcoin's just been sliding. Obviously, traditional markets sliding today as well. We're going to see how this resolves because obviously there's still quite a bit of powder left in Saylor's pockets. They're going to have to raise more cash here pretty soon. But we know, we saw some of the decisions over the last couple of weeks that favored MicroStrategy. People are betting on MicroStrategy. Obviously, Saylor's betting on himself, and they're buying up Bitcoin in the boatloads. Another $2 billion Saylor adds today. Our next headline, Leo, let's bring it up, is very, very similar. Obviously, Michael Saylor's counterpart is Tom Lee. Tom Lee also decided to buy more. Let's see how much he decided to buy today. These guys, they're not buying on the way up anymore. They're buying on the way down. So we know, let's cycle through here, Leo, because obviously these guys are going to have to step in and save us. It's rough. Where's the next, the net new buyer, right? We saw Treasury Secretary Bessent say, look, we seized some Bitcoin. We're not going to sell it. That's a great start. But in order for this, we need to have some new buyers. And, we obviously saw New York Stock Exchange cycle. That is going to be bringing a lot more tokenized equities on chain. We're also going to be talking to Johan from Chainlink about the next tokenized equities. And so, there's a lot more of these asset classes that are currently off chain. They're siloed. They're going to be coming on chain. And that brings a lot of capital efficiency. But when we have all of this, right next to the crypto market, are we going to see, more of these vehicles come on chain, and then a lot of the global democratized access, these new capital people that were previously closed off to the US American equity market, now that they have access to tokenized equities, are they going to be, more into equities than they are crypto? I don't know. Then you have tokenized gold, you have tokenized metals. So next up, Tom Lee, obviously, Saylor's counterpart here. He bought another boatload, 110 million when it comes to Tom Lee. So these guys are pouring in. Obviously, Saylor has a lot more powder than Tom Lee does. $110 million in ETH is nothing to scoff at, but it's not moving the needle. Obviously, there's a lot more selling. It seems as if this is, a sell-off that is spanning not just the crypto markets. There's obviously some exogenous factors that are at play here. You've got Trump going after Greenland. You've got him putting tariffs on the EU, and you've got this tariff ruling, which, I speculated on a show a couple days ago. If this, whichever way this tariff ruling goes, it seems like it's going to benefit the money printer, right? Because on one hand, let's say the Supreme Court says, hey, you don't have to pay back tariffs. Tariffs are fine. You don't have to do anything that you're not already doing. Trump just continues to do what he's doing, doesn't have to pay back any money. On the other hand, if they rule against Trump, which I think is priced right around 70% on the prediction markets, that they're going to rule against Trump, say that the tariffs are unconstitutional, in which case you would have to pay back a lot of money. They may have to turn on the money printer in order to pay that back. So do they have that sitting there? Maybe. Are they going to have to allocate it there? That would be what seems like a waste of money. If they have to print money, that is going to be great for the debasement trade, which ETH, Bitcoin, gold, all of this are hard assets that are quite positioned well for the debasement trade. So we're gonna have to see how this plays out. We don't know exactly what is leading to this, but we're gonna hear from our guests in a moment. Um, and all right, let's keep things going. I think we've got a couple more headlines to cycle through here. Um, let's see. Anchorage Digital could raise up to 400 million as IPO rumors swirl. This is where I want to talk about Neo Finance with you guys. Um, this is where I believe a lot of potential lies with Neo Finance. Obviously, Anchorage Digital is one of the primary players in tokenization. They're helping a lot of legacy financial partners onboard onto the chains, look onto Ethereum and beyond. And so Anchorage Digital is an extremely crucial part of this tokenization infrastructure. And I think that their business is extremely positioned for this. Bloomberg reported that Anchorage is looking to raise between $200 and $400 million in order to go live with this IPO. Market onlookers have long noted that Anchorage, last valued at $3 billion, is ripe for a public offering, particularly as competitors like BitGo gear up for their IPO. I think these things rip. You know, we don't have tons of clarity into the traditional equities market, but if things continue to progress how we think that they are, you know, we're going to continue to see quantitative easing. They're going to continue to pour liquidity into the markets, and we're going to see not just the crypto tokens, you know, do well as a result of the influx in liquidity. And personally, how do I know there's an influx of liquidity? I like to read Arthur Hayes. I think he's got his finger on the pulse. A lot of times he's talking his own bias, but look, you know, the guy's been around the block. He knows where the macro sentiment is. And I think when he says that there's, you know, liquidity that's adding to the system and they have, you know, banking regulation that's getting deregulated, there's a lot of factors here. Are you anticipating that the liquidity influx peaks around March or April? This is when we anticipate that this starts to roll over. But until then, if we continue to see progress in the debasement trade, I anticipate that IPOs, tokenization and crypto IPOs, do particularly well in the public markets, just as, you know, we see some bottoming out and appreciation in the token markets, like we had seen over the last couple of weeks in Bitcoin and ETH. You know, we saw the rise from 3K to 3,300 in ETH. Obviously, Bitcoin got from low to mid 80s upwards of 95K. So we had a significant bounce. Are we going to make new lows? I don't know. Right now we're kind of hovering. Let's keep going. See what else is on the docket here. Maybe just another one or two things. We'll speed run through here. Ethereum is positioning themselves for the Neo Finance institutional bull run, which we believe is on the precipice of happening. Does it happen soon? Potentially. We're going to have to see how it plays out. But let's scroll here because obviously we've seen a lot of things on this list continue to play out. So Kraken launched X stocks. This is doing particularly well. Kraken obviously has their L2 as well. Ondo, big into tokenization, has launched tokenized US stocks and ETFs. We're going to hear more from Johan from Chainlink about tokenization in the US equities markets as well. 24/7 access from the New York Stock Exchange is particularly relevant. Just incredible things here. China obviously is getting money market funds on this as well. Fidelity, one of the bigger financial institutions in legacy finance, is tokenizing their money markets. Google announced their agent payments protocol is enabling AI agents to autonomously execute payments using stablecoins on Ethereum. Tune into our show, AI Supercycle, for more on the AI agent economy. And the list just goes on and on and on. So guys, there's obviously a lot happening behind the scenes. I think we have to think about the adoption curve on a long-term mindset and try to distinguish this from what we're seeing play out in the markets. Okay. And I know if you're levered up and you're playing perps, then all you really care about, you probably care more about the geopolitical nature of things. You care about, are tariffs constitutional or not? How will the US equities market react to some of these things? And what is the Fed doing? These are all very important to the financial landscape as it plays out with regards to these asset prices. On the other hand, we've got the technology and the adoption from financial institutions and big legacy financial players. And so, you know, we're going to continue to see this. New type trader, my bet is New York Stock Exchange will use Canton. look, we've seen DTCC use Canton. I would like to see these players use a public permissionless blockchain like Ethereum. Ultimately, whether they use permissioned or their own private blockchains, we will see composability take place. And I think Chainlink, Canton, these guys are doing a great job. They're at the pinnacle and the convergence point here. That is Neo Finance. We're going to get our first guest up. So let's take a quick break, and we will be right back. Don't go anywhere. We'll be right back with the first guest, Rand, who has an ICO-like opportunity. We're going to learn a lot more about it right after this. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Times over at Zama. Welcome to the show, man. Pleasure to have you.
Thank you, man. Thanks for having me. Super stoked to be here.
Absolutely, absolutely. So I think the right way to think about Zama is obviously a privacy first protocol. But you guys are practicing what you preach, and I think a lot of people are very excited for this auction tomorrow. Tell us, first let's talk a little bit. We don't want to bury the lead here, right? So Zama has an auction tomorrow where you guys are going to be opening up essentially a community sale, but there's some very nuanced mechanics about how this sale will work. So I'll leave it to you, please. Tell us what is special about this community sale versus like a regular ICO or something like this.
So maybe to give a bit of context of what Zama is. So Zama is a confidentiality layer for public blockchains. It allows you to have confidential tokens, confidential DeFi, confidential applications on top of existing L1s and L2s like Ethereum and Solana. So we're not a new L1 or L2, but rather we sit on top of L1s and L2s. So we've been in mainnet on Ethereum since December. And tomorrow we are launching our public auction where we're going to be selling 8% of the Zama token supply using Zama itself to hide the bids of people participating in the Zama auction. So it's kind of like, we're using Zama for the Zama auction to sell Zama tokens.
Dog fooding. I love it, man. I love it. I think, what the mechanism that this traditionally follows is sort of like a Dutch auction, right? Where you kind of start high and then the price falls as it naturally finds a floor.
So no.
Okay.
These Dutch auctions is how people did it in blockchain, but real Dutch auctions, they work differently.
Okay.
They actually use what's called sealed bids. So when people place a bid, the price and quantity is actually private. So people don't know if you're buying 1 token or 1 million tokens. And then the bidding periods, you go from the highest bid to the lowest bid. And the lowest bid, where someone gets filled, is a price that everybody above ends up paying. So the kind of decrease in price and time auction, this is just because before Zama, nobody could run those sealed bid Dutch auctions on blockchains. So they had to find a way around that. But the real OG Dutch auction, the one that Google used for its IPO, the one that the Greeks were using, to sell sheep 2,000 years ago, they're sealed bids, and that's exactly what we did here.
Yeah. And so what is it? Let's dig in a bit around the Zama protocol, because privacy has been extremely hot. We've seen other privacy protocols. We've seen, Zcash had a meteoric run. Monero just absolutely ripped. And now Zama, has raised significant amounts of money, has been in the works for a long, long time, launched mainnet back in December. What is it about Zama's privacy protocol underneath the hood that enables these sealed bid type auction formats where, some of the other privacy technology isn't able to do that?
We use something that's called fully homomorphic encryption, FHE. FHE is a technology that allows you to compute on encrypted data without decrypting it. So for example, let's say you want to send money to someone on chain using USDT. Today, everybody would see how much you're sending, how much money you have, how much money the recipient has. With Zama, you can take your USDT on Ethereum, you can shield it into a confidential USDT token, and everything you do from that point is encrypted. Your transfers, your swaps, when you're staking it, if you're earning yield in DeFi, all of that is basically shielded, so nobody has any idea what's going on. So FHE is the only technology that really enables that because it gives you security. FHE is secure even against quantum computers, which, by the way, you cannot say with something like T's, for example, that have been completely broken. It's also composable, which means that you can use your FHE tokens and you can stake them in DeFi for yield and do all other things that you would do with traditional tokens. You cannot do that with Zk. If you take, for example, Zcash, you can send Zcash confidentially to someone, but you cannot stake your Zcash, you cannot swap your Zcash. You're kind of stuck with just one use case, which is sending confidentially. FHE allows you to do whatever you want. And that's a really big breakthrough is it doesn't change how blockchains work. It just adds confidentiality to existing blockchains.
Got it. So this is a protocol. Obviously, Zama went live and launched in mainnet in December, but this is a privacy protocol that can augment existing blockchains, such as Ethereum, such as layer 2s. And so how do you anticipate that, once, now that it's in mainnet, once the token sale is live, how do you anticipate that Zama will scale, far and wide? Do you anticipate, going after blockchains, integrating with them? What is the go-to-market plan here over the next few months to make sure that Zama proliferates deep within the market?
We don't need to work with blockchains to deploy Zama on those chains. There's nothing that a blockchain itself has to change or integrate. What we need to do is we just need to deploy the Zama contracts on whatever chain we want to enable confidentiality on, and people will be able to start shielding assets and building confidential applications. So we're working on Ethereum first that we launched in December. We're going to be launching other chains in the next few months, mostly VM first, and then Solana later in 2026. Initially, we're focusing on DeFi confidential payments. But if you think about something like the Zama auction, it's actually the start of maybe a bigger trend around confidential ICOs and confidential capital formation on chain because, well, there's a lot of things that are not that good when everything is public.
Yeah. And this is something that we continuously see. We're seeing more and more. Obviously, 2017 era of ICOs, we saw quite a few. There was Gary Gensler and the reign of terror that he brought on the industry. ICOs, no longer were a thing, but now they're back with programs like Echo, like Legion, and so it makes sense that we're going to continuously see some evolution in the ICO space, and we're going to see more and more of really different flavors of these sales, these token sales, as they continue to develop and the technology becomes available. And so the way this auction works is first you shield your stable coins, right? And so this is how you're essentially sealing the amount of money that you're going to be spending on the Zama auction. Behind the scenes, shielding your deposits with your ERC20 stable coins into a wrapping contract issues you the equivalent amount of ERC 7984 tokens, where balances and transfer amounts are encrypted. The shielding is visible on chain, but it's fully confidential. And then we have this window, starts later today, and then goes for about 3 days where the bids start. And so this will run. And so prices are in increments of, looks like about half of 1 cent. The auction floor is therefore 55 million FDV. So talk us through some of the thinking behind this when you were coming up with this, because this is obviously a novel mechanism and you've started to separate as far as how some of these other auctions are done. What were some of the more important components that you took into account where you think maybe others may have missed?
Zama has already raised a lot of capital. We raised over $100 million from Multicoin, Pantera. So we have plenty of cash and plenty of runway. In fact, we launched mainnet before doing our public sale, which is not very common in blockchain. People usually do a public sale to fund the development of their protocol. We already built the protocol, we launched it, and then we're selling tokens. So for us, the auction, and the reason why we went for this sealed bid Dutch auction mechanism, is because we want to maximize distribution, having as many people able to hold Zama tokens so that they can use it in the protocol, they can stake them, as well as have true price discovery. If you believe in free markets, then the only way to know the price of something is to let people decide what price they're willing to pay for that thing. The price of anything is a price people are willing to pay. That's the only thing that really exists. And Dutch auctions are a fantastic mechanism for price discovery. So I don't know how much we should be selling the Zama tokens. So we're just letting people decide how much they want to buy it for.
Yeah. And so, yeah, this is free markets at their best, right? I mean, this is why we're here. This is what we love to see.
You believe or you don't believe in free markets, we'll see what happens.
Like you said, Rand, a lot of people aren't willing to put their name on the line, put their protocol on the line like this. You guys aren't only doing this with your token price, which is arguably one of the most significant things that a protocol has, right? In saying, look, the market's going to decide what the price of the token is. You're also doing it with your protocol. Like, you have deep conviction in this. Where did that come from?
Look, I've been in crypto since 2013. So this is my fourth cycle. At that stage, I've seen a lot of things being tried. And one thing that has consistently been important is privacy, clearly. Privacy is kind of the final boss of blockchain adoption. Initially, people wanted programmability. Ethereum solved that. Then people wanted scalability. ZK Rollup, Solana solved that. And now people need privacy. Because when you have programmability, privacy, and scalability, you can basically rebuild everything that finance does and more on chain. So solving privacy was always something that we believe was extremely important, not just for blockchain, but in general. And then how we launched that, well, as I mentioned, the price is whatever people decide the price is, and we play by it. We play by the rules of that.
Yeah. Okay. I want to get to privacy as a category at large. But first, let's round out the rest of the auction, because we went through phase one, which is shielding stable coins. Phase two, placing your bids, sealing the letter, placing your bid. And then phase 3 and 4, right? Clearing price and allocation. There's 3 possible outcomes. Your bid is above the clearing price, which you talked a little bit about at the top of the show, whereas you would receive your full allocation and a refund for any overpayment. So it's not like, oh, you overpriced this token, we're going to collect. No, you actually refund anyone who is over the clearing price.
Your bid is like the max price you're willing to pay. But if the last bid that was cleared is under your price, you still get your tokens plus a refund for the extra money that you paid.
Yeah. Yep. And then if you bid at the clearing price, if quantity exceeds remaining supply at that exact price, you receive a pro rata share of tokens, refund the remainder. Last option here is, or the last possible outcome is that you bid below the clearing price, in which case you would receive no tokens and you would get a full refund. And so obviously, people want their tokens, but at the price they're willing to pay. And so this is, a lot of game theory in which people are going to be thinking through how they're pricing the Zama token. Just to round out the rest of this auction mechanism is that, when it's all said and done, and all the bids and things are counted, we can claim our tokens on February 2nd. Once allocations are finalized, participants can claim both their Zama as well as their any refunds like we talked about. And these will be distributed as standard ERC20 tokens. Refunds can either be claimed as ERC20 or as the shielded ERC7984 tokens. Anything else that people ought to know as they're thinking through the game theory behind the Zama auction?
Yeah, I mean, I think there's something important to also take into the equation here is that staking the protocol is already live. Year one, we are distributing 5% of the supply as staking rewards. So whenever you get your tokens in the auction, you can stake them immediately. And since there isn't going to be a lot of circulating supply, but there is going to be quite a big staking reward, it's actually pretty interesting when you're thinking about what's the right price to take into account the staking rewards you're getting from participating in the auction and staking those tokens. So I think it's interesting because I've been looking at people play games pre-auction. I think we're learning a lot about how people behave in those kind of situations, and quite frankly, I think that what we're doing here could turn into an actual product that other people can use. Other people could be reusing the same auction mechanism, which is a great use case for Zama, the protocol itself.
Yeah, it certainly is, and this is one of the broader things about privacy here. Zama is the right way to think about Zama is effectively a generalized shielding protocol, right? Like we saw.
Yeah, that's a good way to see it. Like I like to think about it as HTTPS for blockchain.
Okay,
Yeah,
got it. And so when it's all said and done, what would make this auction a success? What are you looking at? Any kind of milestones in terms of participation, adoption,
distribution? The more people participate. So we have 25,000 people who registered. So I'm expecting a good number of them to be participating. That's a lot. Keep in mind that 6 months ago, Zama wasn't on the map in blockchain because we had not yet announced that we were working on a blockchain protocol. So Zama and FHE, because today the only FHE technology that works is Zama's technology. We went from non-existent to dominating the privacy narrative. So I think people really want FHE to work. They really want privacy on chain, and they see that Zama is the most exciting leading project in that space. So again, I don't have any financial objective for the auction because we already have the capital to continue building for the next few years. So whatever people decide the price is, we'll be happy with that.
Awesome. And just a word about the privacy category in general. Obviously, Zcash, Monero have been on an incredible run, and the whole idea and concept of encrypted money has really been a mind virus. It's really, it's really, people have thought a lot about it as of recently, and so the idea that we can encrypt and shield any ERC20 token, I think, is an extremely, paradigm shifting, way in which we can accelerate a lot of the adoption and use cases that are available to us. Is there any use cases or anything that is what is most exciting to you, right now in the current landscape of privacy on chain?
Well, I mean, there's so many things, to be honest. I'll give you one example that I'm very excited about. It's an app that's called Raycash that is building on the Zama protocol. So Raycash is a neobank that uses confidential stablecoins to keep your money private, but in a self-custodial way. So today when you're looking at banking, you have basically three choices. You have traditional, banks where it's completely centralized, they can freeze your assets, you don't own anything, okay? And then you have the blockchain banks, the on-chain banks. The problem with on-chain banks is either they're using stablecoins, but everything you're doing is public, or they're using ZK, and you're basically stuck with only payments. You don't have staking, you don't have swaps, you don't have anything else that you want from like a modern banking app. Confidential stablecoins with FHE, so what Raycash is actually using, allows you not just to have confidential payments with your credit card, it also allows you to stake your confidential balance to earn yield. It allows you to swap your confidential stablecoins for other crypto. So if you take an app like Revolut, you can rebuild 100% of the features of that app on-chain in a self-custodial manner with full privacy and full composability with DeFi. That is like, I mean, I come from Lebanon originally. Okay, I don't know if you know that, but Lebanon, a few years ago, people got rugged by their central bank. They woke up one morning, the central bank said, "Oh, we're sorry, the money's gone. We're going to freeze all of your dollars in your bank account." Boom, gone. People's life savings, gone. This cannot happen with an app like Raycash because you own your money and you have privacy.
Yeah. Is that part of your crypto story? The lore behind Zama is seeing what happened in Lebanon and the failure of the central bank caused kind of an uprise in your crypto confidentiality, encrypted money. Was that one of the things that helped to accelerate your journey as an entrepreneur in the space?
Yeah, I mean, it's one of it, but I've actually been interested in FHE for over a decade. I discovered this technology working on my previous company where I was working on confidential AI. So back in 2015 to 2019, I was building this AI company, which I sold eventually. And I discovered FHE. I was like, oh my God, this thing is going to be the future of everything. Like everything's going to be encrypted, AI, blockchain. So a week after I sold my AI company, I started Zama with my co-founder Pascal Payet, who's one of the inventors of homomorphic encryption. So it's one of those things where when you discover this tech and you understand the power and what it enables, it's very obvious that this is going to be used everywhere at some point.
Yeah.
Because why not? Like, why would you not shield your blockchain transactions?
Mm-hmm.
Why not? I mean, it's just a net benefit to everyone.
Yeah, it really is. And there's no downside. Makes it a no-brainer. It makes complete sense now. You sold your previous company. The next week you start another company. It makes sense why you were building all through the holidays, and you launched your blockchain. You launched mainnet a day before 2025 ended.
We said we would ship in 2025. We shipped in 2025.
Certainly did. Rand, thank you so much for joining today. It was an absolute pleasure. Best of luck. And the auction tomorrow is going to go great. We're all rooting for you. So thank you so much for joining. We'll see you next time.
Thanks for having me. See you guys.
Absolutely. Cheers. All right, guys. That was Rand on confidential finance. Confidential stablecoins is a core piece of what we believe is just where we're headed, which is neo-finance. You've heard us talk a lot about neo-finance. This is the evolution of DeFi. It's also the evolution of legacy finance. And encrypted money is part of this thesis where obviously, the current legacy financial institutions have a lot of control over, the bank deposits, their lenders, where the money goes, where it flows in and out. They may not want to share all of those flows with competing banks, with their end users, with, regulators. There needs to be checks and balances, but in order for, the deep privacy and confidentiality to continue to run, we need protocols like Zama. Otherwise, we're just plagued by the existing public nature of a lot of these transactions. So I'm particularly excited to see Zama's auction go live tomorrow. I'll be participating. I think it's going to go off without a hitch. And I love to see when protocols dog food their own technology. The easy way out is, you third party, you get a vendor for everything, and you're kind of just like this coordination engine in the middle. But actually building hard technology, and then not just building it, but using it yourself in flight where millions of dollars are at stake. I'm excited. If this goes off without a hitch, Zama is positioned for a tremendous year. So I'm excited to see how it plays out. We're going to get our next guest up in just a moment, guys. Don't go anywhere. Johan from Chainlink is going to be here in just a minute, talking about how Chainlink is bringing the entire US equities market 24/5 on chain with Chainlink price feeds. Don't go anywhere. We'll be right back.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with relay.link. Relay is closing in on $10 billion transferred. Go to relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Welcome back, guys. I am here with Johan from Chainlink, the Chief Business Officer. Today, Chainlink announced they're bringing the U.S. equities market on chain, $80 trillion of U.S. equities in the market, and they're bringing on-chain equities data 24/5. This comes amidst a lot more tokenized equities conversation in the market. Johan, it's a pleasure to have you. I'm excited to talk because Chainlink has a lot of very cool things going on as we endeavor on this, what we're calling neo finance, which is this convergence between legacy finance and the legacy crypto infrastructure. We believe there is a new echelon coming, and Chainlink is at the center of this. So it's a pleasure. It's a pleasure to chat. Thanks for being here.
Yeah, thank you so much for having me on.
Absolutely. Well, tell us a little bit about how this came to fruition. I think, we see on Hyperliquid, on Lighter, on, a lot of what the New York Stock Exchange is talking about, bringing these tokenized equities on chain. You're the Chief Business Officer at Chainlink. What was the business case to bring this data source on chain? Ultimately, what does this help enable and unlock in the on-chain markets?
I think it can be summarized by the evolution of TradFi and the evolution of DeFi. Where is DeFi heading? DeFi is going towards supporting more and more assets, more and more commodities, basically going from being a place where you could only trade tokens, like crypto native tokens, to being able to trade equities, commodities, etc. At the same time, where is TradFi going? Well, TradFi is going in a very interesting place where we've had for the longest time local markets. The US stock market was aimed at US investors, right? The Singapore stock market at Singapore investors. This is no longer the case. Every stock market around the world is becoming more and more globalized. That means your investor base is actually for people outside the US more and more. If you actually look at the amount of people who own the US stock market, in percentage terms, it used to be 8% were outside the US around 20 years ago. Now it's 18%. So this amount has been growing. Now, what does this mean for us? This means you actually want equities to be trading 24/7 because more and more stock markets are meant for a global audience, not for a local audience. So this launch is, to us, the logical evolution for both TradFi and for both DeFi. And that's why it just made sense to launch it. And when you talk outside of macro terms, which I just did, into actual practical real-world adoption, we already had 8 users start using these equities stocks, equity feeds. One of them is Lighter, which is the second biggest perp dex in the space. Another one is BitMEX, which is the first kind of perpetual exchanges for crypto in the space. So you're seeing already wide adoption, which I think is kind of confirming that we're working on really the next phase of adoption for both DeFi and also TradFi.
Yeah, very well said. And this is a convergence that we anticipate will continue to develop. And I think you laid it out perfectly well. Also, one thing as to why this hasn't been done before, the technology simply wasn't available, right? There were not high throughput blockchains. Ethereum wasn't at scale. We didn't have ZK technology. All of this powers perpetual exchanges like Lighter that allows them to scale. And once you have the ability to scale, then it becomes a matter of porting in that data so that well, you have something to trade, right? And so now we're seeing the continuation of new asset classes become on-chain tradable. And I think US equities is one of the largest markets and asset classes in the world. It just makes sense for this asset class to be brought on-chain. Now, Johan, I want to get your take on something because we also saw the New York Stock Exchange come out and announce that they're going to be developing a tokenized equities platform, and they're going to be rolling this out and enabling some 24/7 trading. What's your reaction to this? And I'm curious because a lot of people on, the crypto Twitter have said, "Hey, how does this help crypto? If it's equities, that's not crypto tokens. And if they're building some, permissioned private blockchain, that's not helping all the L1 tokens and L2s that, we've come to know and understand over the past few months and years." How does it help crypto? And if so, how?
Okay, I think it's two parts. First off, New York Stock Exchange launching this kind of confirms what I was saying earlier. This is the next evolution for TradFi. The next evolution for TradFi is this market 24/5, fully composable like we have in DeFi. Fully composable means you don't have a halt in the trading at a certain time, which then creates all the issues, with liquidity, volatility, etc. Now, regarding why is it good for crypto? Crypto, and this used to be the messaging since 2017, actually. It's been a long time around, even before. It's about how do we tokenize the whole world, right? That's our main motto. It's about taking a siloed infrastructure, which you have in every country, and the stock market is one example of this siloed infrastructure, and making it more global, making it more accessible, making it more composable, being able to have one protocol which has US equities, Hong Kong equities, South American equities in one single place. That's the main goal of crypto. Now, folks can have different versions of what's good for crypto, right? Mm-hmm. What's good for my asset I invested, what's good for, the vision I have. To me, the vision that many people have joined the space for was a vision which was around how do you make the whole world more composable? How do you make every asset more composable? How do you break down silos? Because when you break down silos, you make everything more efficient. When you make everything more efficient, you create new opportunities for people to open businesses, to make money, to get things they couldn't do before because everything was so siloed and opaque in a way. Yeah.
Mm-hmm. Yeah, absolutely. And I think you guys are doing this and you're bringing US equities, like you said, you're bringing US equities closer to other equities markets, which I think is maybe something that people don't initially think of. They think, oh, we're bringing US equities, we're bringing this on chain, it'll be next to the rest of my crypto tokens. But most of this is becoming composable with, equities markets in the US, Hong Kong, China, Japan, all of this. It's all able to coexist together. And I think that is something that people don't recognize right off the bat. This makes the entire financial system more efficient. Also, a question a little bit deeper into the technology here. You guys are not just providing the middle price, right? Which would be sort of an somewhat unprecise way of measuring how these things are trading. You chose, and let me just make sure that I have this right here. You guys chose to launch this particular oracle with market status, bid ask price, bid ask volume, staleness indicators, last traded price. How does this help the robust nature of these markets and help, again, close some of the information gaps and greater capital efficiency so that we help unlock a lot of the value you were speaking of before?
Yeah, I think the way to look at it is for the longest time, crypto was in many ways inefficient, and this allowed a lot of financial arbitrage to happen. As we get more and more sophisticated players, these sophisticated players actually need more data points on chain to be able to create the most efficient market we can create, right? So a lot of these data points you're providing are data points market makers, hedge funds, etc., do require in order to create an efficient market on chain. Those are things they've come to be used to in TradFi that we're bringing to DeFi. Really the way to look at it is we're taking things from TradFi into our space to make our space better. But our space is also making TradFi better, right? When you talk about composability, what are we doing? We're making TradFi as composable as DeFi. That's a huge deal, right? So it's really this shared kind of exchange between what TradFi brings to us, what we bring to TradFi, and then being able to create the ultimate experience for people around these two exchanges.
I think that's a fantastic point. A lot of times we think, oh, we want to bring TradFi on chain, right? We want to bring these equities. We want to bring these asset classes. We don't think about crypto's main export. The export is the blockchain, which can then go into the TradFi ecosystem, the legacy financial ecosystem, and improve the way they're doing things over there. And I think Chainlink has been one of the best at doing this from both ends of the spectrum, essentially having a very, very clear vision of where the space is headed and squeezing both the crypto side from over here and the legacy finance over here and saying, we know where this industry is headed. We are going to help everyone get there and do it from both sides. And Link is at the center of this. Chainlink is at the center of this. And so as you know, we sort of think about this vision that Chainlink has helped to illustrate. What does this mean for Chainlink? Because obviously you guys have been powering the DeFi ecosystem for so long. Your Oracle price feeds are embedded into Aave and you know all of the major DeFi applications. Now you're starting to go deeper into the legacy financial world. What does this mean for Chainlink as the vision continues to evolve?
The simple way to look at it is we're a bridge for both worlds. And the way we've evolved over time was always to look at holistically what's coming next for this space. For DeFi, it all started with, okay, how do we build DeFi? We need data for DeFi, right? Without data, DeFi cannot exist. So we started in 2018 providing data feeds, which now power like 80% of DeFi, basically. With TradFi, it's actually been the same way. We've looked at, okay, what does TradFi need? Well, they're gonna get into tokenization because tokenization is a logical step for them. It's more efficient, it's more transparent, it improves a ton of stuff for them, right? So what do they need? They need compliance. We launched ACE. They need cross-chain. We launched CIP. They need DAV data. They need to be able to do transfer agency. We launched a digital transfer agent with UBS. So you see, for us, it's I think we are probably one of the most pragmatic companies in the space because we don't really have, we have a very clear mission, which is how do I bridge these two worlds? How do I make these two worlds interact? And we don't really deviate from this in any aspect. All we do is basically how can these two worlds connect together and what's coming next for DeFi, what's coming next for TradFi, and this basically informs our roadmap.
Yeah.
And
and ultimately, I think this is only one world. You guys, you create this, and if their two worlds are so interconnected, if they're so connected, they're only one world. And I think that is the vision that we're building towards. And you guys have helped to create a very interconnected world of finance. So, please.
So the way to look at it is, I think for the longest time, TradFi was a closed system and DeFi was a closed system, meaning the two didn't interact. Our goal has been to bridge down the silos more and more between the two through data, through compliance, through cross-chain. And every product we launch is basically a product around connecting these two worlds and getting them from closed systems, which they were only a few years ago, only 3-4 years ago. The interactions between DeFi and TradFi were nothing except news article, oh, TradFi is bad, oh, DeFi is bad, right? That was basically the only interaction. Now we're in a completely different world where these two worlds are actually interacting on a day-to-day basis through tokenization, through the product we launched today. These are examples of how we bridge these two ecosystems.
Yeah, absolutely. And it's something that is going to continue. Johan, the last thing for me is, Chief Business Officer at Chainlink. Are you headed to Davos this week? Is anyone from Chainlink headed to the World Economic Forum, hanging out with some of the leaders there? What's the plan?
We have some folks in Davos. Yes.
Yeah. What is the messaging like? How is there's big players out there. What is Chainlink? What is the message that they're going to be spreading to some of these guys?
Everyone is talking around tokenization. We make it clear to all of these guys, and many of them know us already. That's a great thing. Tokenization requires Chainlink. Tokenization is about connecting things. Who is connecting things? Chainlink. all right? Like who has been connecting the space to TradFi for the last 7 years? We have. So basically, in all of the tokenization convos we're having, Chainlink is a recurring topic.
Yep, totally. Spreading the good word. Johan, thank you so much for joining.
Thank you.
Chainlink is bringing these two worlds together. It makes a ton of sense. You're out there preaching tokenization. Man, I love it, and I think we're going to see a lot more of this to come. Johan, thanks so much for joining us.
Thank you so much for having me.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Man, Johan's the man. I just, I said it during the chat with Johan. I continuously think that, we're going to have like this convergence of the two worlds. We're seeing a lot of the companies that are now kind of straddling the line between legacy finance, off-chain systems, and on-chain systems. We're going to hear from Omar from ZK Sync coming up, and they're doing a lot in the RWA space as well. And so RWAs in general, right, represent equities. It's not just equities; it's any asset that is natively issued off-chain, right? And I think that's something that's important to understand. Is really what you've got here at the end of the day is you've got assets and bridges, right? And so, these could exist on chains, but at the end of the day, we know that, whether it's a roll up or another roll up, these are kind of just Ethereum. And even at the end of the, it's all L1s. Most of these are going to have some sort of validator set. It's going to be somewhat distributed. And we can interoperate amongst these chains relatively well. Like we spent months diving deep into the interoperability space, into the modular space, understanding the nuts and bolts of blockchain architecture so that we could understand where there's gaps and where the market still has room to grow. And I think what we're seeing now is the technology is ready. It is essentially stable to support an influx of new assets. And that's what we're seeing play out. We're seeing a new asset class. If you want to call it RWAs, people love and they hate that term. I want to think about RWAs and what's coming on chain now as assets that are not natively issued on chain. Obviously, ETH, Bitcoin, these are things that are really not, you can't take them off chain. You can take them from blockchain to another. You can write them down. You can put them in terms of a seed phrase, you can put them, into a document or a company or a contract. But fundamentally, these assets were issued on chain. They belong on chain. What we're seeing a lot of now is seeing natively off-chain assets be brought on chain. And I think tokenization platforms and a lot of the companies that are going out into the neo finance space and bringing these things on chain is where we're going to see an explosion. We're seeing it in tokenized equities, and we're seeing it on tokenized gold, metals. This is going to create a lot more composability amongst the financial system at large, both the off-chain assets as well as the natively issued tokens and crypto native assets as well. And so ZK Sync has been doing an incredible job in this space. They're going out and they're helping legacy financial institutions with billions of dollars in money market funds, in all sorts of different asset classes and products. They're bringing these things on chain for the benefit of not just the institutions, but also the end users. And so we're going to have Omar come up and we're going to talk about everything that is happening with RWAs at ZK Sync and how this trend is progressing. So without further ado, let's get Omar up on the show. There he is. Omar, welcome. Welcome back.
Hey, Robbie, how you doing, man?
Good. Good. It's good to have you, man.
Yeah, glad to be here again. It's been like 3 months since we last chatted.
Yeah.
Yeah.
Yeah. Since then, you guys have been busy, huh?
Yes, we've been pretty busy. Q4 was pretty pivotal for us. We had already, we launched Atlas, Airbender, which is now #1 on ethproofs.org. If you want to take a look in terms of just both cost efficiency and speed. And it really was a big pivotal moment also from the business side of really focusing in on enabling institutions and enterprises to start building on Ethereum in their own terms, with full privacy. And that's what we call Providiums.
Very cool. And so, we've had a wide array of people on this show. Like last week we had Mike Cagney, the founder of Figure HELOC, which is doing incredible things. But they've got 20 billion in these home equity loans.
they're doing it on Providence blockchain, which is a little bit questionable. It's a little closed off. It's not quite, the public permissionless infinite garden that we like over at Ethereum. And then, you've got a lot of these announcements coming out, New York Stock Exchange, DTCC, they're using Canton. It's again, like kind of this like opaque blockchain thing. You guys are sticking to your guns and continuing to double down on Ethereum. Talk to us a little bit about Providiums and why it's so important that these things are on Ethereum.
Yeah. So one is there's historically when we've been talking to banks and institutions for like a little over 3 years now since when I first came on, because we realized blockchain was a big step function up for the entire financial ecosystem in terms of mostly from like how these systems actually work and communicate with each other, how they become interoperable, etc. And one of the key things that we also realized that you do need a settlement layer that is fully decentralized and fully neutral, and that is, can't be turned off. It doesn't, Ethereum 10 years plus has never stopped. Right. And so that is extremely pivotal for getting the base layer for which you can build everything else on top of. And that's why, ZK Sync started building out. And that's why we built out Providiums as well in terms of taking the ZK stack, adding in a number of different layers that enterprise and institutions are going to want, everything from permissioning, role-based access control, full privacy, complete control and ownership over the system, extremely high performance, and interoperability. A lot of institutions also want to build on top of Ethereum, and you see all these announcements of so-and-so launching like their tokenized assets on chain, different governments now like UAE with ADI chain also building for the digital dirham stablecoin. And so it's a very symbiotic, I think, relationship where you have one of the largest on-chain capital markets, which is Ethereum, and you've got Providium, which is kind of like your private space where you fully control everything, but you can still interact with everything on Ethereum. You can interact with all the DeFi applications like Aave, Morpho, etc., directly from your layer 2. And this is thanks to Airbender and the significantly fast ZK proofs that we can now do. So settlement on Ethereum, the window for bridging back and forth between L2 and L1 has pretty much diminished down to minutes, and eventually, we'll get it down to under a minute and just be seconds. So it almost creates not necessarily the way to think about it is, it's a layer 2, it's a chain, it's a giant ecosystem, it's a massive undertaking. These can be very small systems or app chains, and you have complete control, complete privacy, but you're still interacting interoperable with the infinite garden, as we all say.
Is that where you think this is going? Because a lot of this is currently on L1s and it is permissioned, but they can get all of that and they can still remain composable by doing this in an app chain format. And I think that is something that we're going to continue to see a lot more of, because right now I think a lot of people are like, hey, this is great. The New York Stock Exchange is going to go 24/7. They're going to tokenize equities, but how does that benefit crypto, right? And this is kind of like what's happening on, crypto Twitter right now is, this is great. They're taking these assets that aren't crypto tokens. They're not really, like my bags. They're like this other thing, and they're putting them on a blockchain. It sounds like it should be good. It should be bullish, but it still feels like people aren't really able to connect the dots. Do you think like the New York Stock Exchange going 24/7 and going deeper into tokenization, do you think that has direct benefits to crypto, or is it sort of like indirect? Maybe it's a Trojan horse to get them thinking about it, and then they'll use it as a stepping stone to ultimately become more composable or go into this deeper, and then it will become more evident. Or do you think there's tangible direct benefit from them tokenizing going 24/7?
I think it's a huge stepping stone for the entire industry. Everyone should be extremely proud that we finally got to this point where you have major institutions like NYSE and ICE moving on chain, doing 24/7 trading. You have to understand, like, these institutions have been building. They always understood the promise and the benefits of moving to blockchain. It was just a matter of time. And this is what I think everyone in the industry has been wanting to get, which is, hey, we want the rest of the world to take blockchain seriously as a complete new paradigm shift in how assets are treated, the move being composable, all of those benefits. And so To me, this is a huge validation of everything that everyone in the crypto industry has been building towards. I can see how, maybe, those in the trenches are a bit dismayed because, markets might potentially be down, like, etc. But at the end of the day, the use cases and the actual benefits of the blockchain, the rest of the world is starting to really open up and see them and start to get into this adoption. The rest of the world's, I mean, the total addressable market for now is, we just took a 10x in addressable market for what crypto and blockchain can do. That's how I look at this. This opens up an entirely new venue for us where, last year was a pretty big boom year for, let's say, stable coins, for money market funds, but now you got the entire equities market moving on chain rapidly. Pretty soon, that's going to lead to a lot of the other markets that are even bigger than equities. Like real estate will eventually start to move on chain. You'll start having private credit, commodities. And so this makes crypto and blockchain be taken very seriously by a lot of the biggest names in the world, including governments. Now, governments are now going to start taking crypto and blockchain very seriously. And you'll see more and more either stable coins and deposit tokens or tokenized deposits also come on chain very rapidly.
Yeah. You know what this feels like? It feels really similar to when we had arguments within Ethereum about, if like rollups are competing with ETH or one another, but we kind of realized, like that's a silly question to ask when a lot of this is becoming tokenized and it's coming on chain. I think, again, people are thinking, how does this really benefit like my closed loop thing where I'm at right now? They're not really seeing the bigger picture, which is if you bring a new asset class in, one, that's significantly greater volume that is going through the chain. In theory, that's generating fees for the chain, and the L1 token, whether it is ETH or a rollup token, should do better. Again, that's kind of like a direct tangible benefit. The other one is if you position, there's like $80 trillion of value in the US stock market, right? If you put that right next to all of the crypto tokens that are on chain, you would think that there's this wealth effect where it becomes a lot more composable and you see a lot more flows back and forth. And obviously, the stock market being bigger than, the crypto market by, multiple orders of magnitude, you would expect some of that to spill over and to sort of drag crypto up with it. So, I think the current dialogue on chain is a little bit short-sighted, and it's really a matter of thinking a little bit bigger as far as how this is going to benefit, the forthcoming of a lot of these chains and a lot of these projects that are positioned for incredible upside, such as ZK Sync. You guys have been in this neo finance space, and I say neo finance as sort of this evolution of both legacy finance and crypto infrastructure, kind of this convergence point between the two. You guys have been building this, have been building with RWAs in mind for a long time. And Alex, founder of ZK Sync, put out this roadmap for 2026. Providiums are at the top of the list. Could you just walk us through the roadmap a little bit? We've got Providiums, we've got ZK Stack, we've got Airbender. How does this tie in, together so that we ultimately get, this flourishing on-chain economy with all of this new value that, that we're talking about?
Yeah. So I would say 2025, in December 2024, we put out one of our first roadmap posts, which essentially listed out all the things that we're going to work on and try and hit from a pure just technology infrastructure standpoint. That was full EVM equivalency, EVM compatibility, significant improvement in performance. Now we can hit 15,000, even 30,000 TPS per chain, and significant reduction in costs. I think now I just ran some of the numbers, but you can pretty much run a high performance machine if you're literally anyone with very low cost. I mean, we're talking about less than a tenth of a penny per transaction, including everything, including the provers and settlement. And so that was kind of, we had to lay down that building block before we could actually go to market with a very focused product, which is Providium. We needed to be able to make sure anyone can build everything that's already been building in EVM. They had all the performance needs that they could even imagine or needed in their own environment. And they had all the privacy and compliance and control and ownership that was also needed for most of these institutions. So that's kind of where 2025 ended. And now the new phase for us focusing on the building is the infrastructure is there. The technology is now there to go and capture the market. And now it's about building very use case or segment specific products that go and capture different segments of the market. For example, Viridium's really targeting fintechs, neobanks, banks, and governments who want to build on top of Ethereum, who want to build in their own fully controlled environment with privacy.
Yeah. Yeah. I mean, Omar, you're preaching to the choir here. We put out this market map last Friday, and it showed, where we think a lot of the adoption is going to come from in 2026 and beyond. The two major categories there were stable coins and tokenization, including the issuers, the stablecoin builders, the apps, as well as, the tokenization platforms, the product issuers. And then you've got, this layer of fintechs, neobanks. We believe a lot of the wallets are going to end up going in this direction. We believe a lot of the legacy financial institutions are going to have to innovate, especially if we get, the Clarity Act that forces some of these banks to pay some higher interest because, we know the stable coins are. And so if that happens, we expect a lot of these legacy banks to look more like neobanks. Give us your 2 cents on what we're calling the neo finance thesis. Do you like it? How did you guys arrive at this conclusion? And what's the right way to position within this category going forward?
Yeah, so neo finance is an interesting term. I think historically, if you look at fintechs in general, which were maybe the previous iteration of this, most of them are just UX wrappers on existing rails. Neo finance to me is taking all that same what we've learned from building really good customer user experience, and essentially rewiring the entire rails it's been built on. And blockchain and decentralized blockchains, open permissionless blockchains, give you that brand new rail to build neo finance. And this is where, like NYSE moving 24/7 trading is fantastic, because you can start taking some of these assets that have always been on Web 2, had always been on archaic rails, and now start making them composable with all the things that we like about in DeFi, but with 24/7 rails that don't ever shut down.
Incredible. Yeah, man, this is something we anticipate a lot more of to come in 2026. Because we've got this happening on the fintech side, we've got this happening on the legacy side, and also on the crypto infrastructure side, such as ZK Sync. It's no longer like we're solving the interrupt, we're solving problem solved. Like you guys did great. Like check, did that. Now it's about bringing this and bringing this composable into, the bigger pie of, this greater financial world that's out there, because finally the tech is ready. The builders did it. Now it's time to, innovate in the more financial sense and unite these two worlds. And so you guys have something called the bank stack. I think this is an outgrowth of a lot of the work that you've done on the Providiums, on the privacy side, the interrupt side. This is something that, you, like you said, you spoke to the banks and you talked to them, you understood their problems and their pain points. And this was the solution to that. Give us a sense of, how those conversations with banks went. What were their pain points, and why is the bank stack, the right solution for them?
Yeah, the biggest pain point historically has always just been privacy and compliance. Like, how do I build on blockchain without, essentially giving everyone my data, without people seeing my transactions? It should be on a need-to-know basis. Then, okay, so that problem got solved historically by the enterprise blockchains, like the hyperledgers, et cetera, but they were completely isolated. And then you start hearing, okay, interoperability. We know privacy and compliance we can build in the existing enterprise blockchains of the previous cycle, but now interoperability is a big issue because everyone's just building walled gardens that are completely isolated. They tried solving that by maybe thinking of consortium chains, but that doesn't necessarily work. And so a lot of them have gotten accustomed to, okay, it's time to just go and join the open, decentralized world. But if you do that, you still need the privacy and compliance and ownership capabilities, and that's where the idea for Providiums came. And the bank stack is really just a buildup of if Providiums are the computer that enables you to build on chain, build on top of Ethereum on your own terms. The bank stack is really just going to be all the different features and application integrations that we'll build into it. So it's more of a turnkey solution. So everything from, price data feeds. I think you just had Johan from Chainlink on, having like Chainlink price data feeds on there. So you have that, having access to Ethereum DeFi and liquidity right away, having access to all your MPC wallets, all of that infrastructure, but then having key applications. For example, you're going to need things that allow you to accept and send any stablecoin or tokenized deposit.
Yeah.
So the bank stack is really about making sure all that plumbing works from day one. And we have that built in to every single part of our stack. And I think one of the terms you'll probably start seeing more and more is also tokenized deposits, which could be one of the fastest growing sector, in my opinion, for 2026. As banks are going to aggressively start moving on chain, they're going to tokenize their existing deposit base and start making those be composable with the on-chain world. But obviously, it's different from stablecoins. And so we're going to be working on making them be fully composable across the blockchain world and Ethereum.
Awesome. Yeah. I mean, you guys already did great work with the ZK stack, helping a lot of the composability and interop across L2s. You spun up a lot of the app chains, dug deep into that. And now going into the banking world, bringing a lot of that expertise into the bank stack, right? And so help put these pieces together. How does the bank stack, like you're saying, tokenized deposits, compliance, all of these things out of the box. And then on the other side, ZK stack helps unite a lot of the Rollup ecosystem. How do the two stacks work together? How does ZK stack and bank stack, how do these fit together to ultimately bring, this entire ZK Sync experience?
Yeah, so ZK stack is the underlying blockchain protocol. So think of it as the rails and the underlying technology infrastructure needed. The bank stack is really just taking Providiums and adding in a lot of the features that banks really require. Everything from having webhooks and connectivity to core banking ledger systems, so you can have one-to-one reserves for tokenized deposits, having all the right MPC wallet providers on there so you can bring your existing wallet infrastructure on chain, having access directly to Ethereum key DeFi applications, so you don't have to build those integrations yourself, and maybe even having some of the key asset issuers also be available. So those that want to do, let's say, cash sweeps with tokenized money market funds and their stablecoin tokenized deposit holdings, having all those key features, that's really where the bank stack starts to come in. It's really just layers of capabilities, applications that are use case specific, that enables you to take any chain built using ZK stack and using Providium, and just start building your application that you need and start going to market way, way faster. The key here is to take, historically, building L2s for enterprises or even building chains has been a massive undertaking. It takes a year or two to go from ideation, decision-making, strategy, testnet, development. What we want to do is take from ideation, strategy buy-in at the C-suite level to maybe months, even just weeks, in terms of having something ready in production. And that's what we want to get to.
Yeah. And now there's a lot more examples out there in the wild that you can point to and say, hey, here's a success story, right? You guys want to do what they did? You get buy-in at the C-suite level. It's out of the box, like you said, maybe, days to weeks, not months in terms of engineering overhead to deploy. And so, as we wrap up here, Omar, you said tokenized deposits kind of flying under the radar. If you had to pick like one, sort of underrated trend that you think is going to be particularly big, but, maybe it's not getting the attention it deserves right now, is it tokenized deposits, or is there something else that you're particularly excited about headed into 26?
Yeah, I would say, so you don't hear a lot of this on, let's say, crypto Twitter, for example, but I would definitely say tokenized deposits could easily become the fastest growing on-chain asset class by AUM. I imagine just on ZK alone and on Ethereum, you'll probably have anywhere from $20 to $50 billion worth by end of this year. And this is essentially being brought on by, the Genius Act and, hopefully soon the Clarity Act as well. Because historically banks always thought that they could just wait. They always knew they were going to move on chain, but they thought they had enough time. Now it's pretty much a land grab. Everyone is moving extremely fast. And you can see that because, every week now there's a new story about some big institution doing something on chain. Tokenized deposits is really, for banks, it's digitizing their actual deposits and making them be usable in the on-chain world. And so it's a two-sided coin between that and stable coins.
Right. And that was my question, is how are tokenized deposits different from stable coins?
I think for the most part, you kind of just need to go into the Genius Act. For one, tokenized deposits can be FDIC insured.
Oh,
that's really big. They can also offer yield. But more importantly, banks have deposits. That's their core asset. And tokenized deposit allows them to actually take their deposits, move them on chain, and make them be composable in 24/7. Without that, you can't. They have to use stable coins. It's not necessarily one-to-one. It's stable coins are reserved differently, and so think of this as just like a stepping stone and a core function or a core asset that banks and institutions are going to need to be able to do everything that they want to do on chain.
Got it. So once a stable coin enters the purview of a bank and it becomes in bank's custody, a deposit, then it becomes tokenized. It becomes a tokenized deposit, not a stable coin.
Yeah, it's actually the other way around. So like deposits they already have, they can just convert them and move them on chain and actually start taking advantage of their existing fractional reserve banking system, moving on for lending, think of it for like loan receivables or card receivables, etc. But yeah, it's a step function up change for them in terms of their existing core banking infrastructure.
Yeah, makes sense. Omar, thank you so much, man. Absolute pleasure always to have you on the show, and best of luck. 2026 is going to be a good one. Let's crush it.
Let's do it. Thank you for having me.
See you again soon. Thanks, Omar.
Thanks. Bye.
Bye. All right, guys, tokenized deposits. Haven't heard a lot about it, but makes sense. Stable coins obviously have to be one-to-one backed. They're not FDIC insured. If you have a bunch of cash and deposits sitting in a bank vault, basically sitting in a bank's database, then they get tokenized. It could be a stable coin that someone deposits into a bank, or it could be cash someone deposits into a bank. Once the bank takes custody of that and decides to tokenize it, there's a lot more exciting things that they can do with it that are not possible elsewhere, because Genius requires stablecoins be one-to-one reserved. Look, our banking system is not one-to-one reserved. We have fractional reserve banking, and that's how credit is created. And so taking deposits and tokenizing them brings them into the purview of what is normally done in the banking system, allows credit to be created, but again, keeps it in a tokenized form. And I think Omar is right. I think, this is a sector that we can anticipate a lot more growth in 2026 and beyond. Guys, thanks for another great show. We're going to see you again tomorrow, same time, and we're going to have another great show for you tomorrow. So stay safe out there. Don't get liquidated, and survive to trade another day. We'll see you guys again tomorrow. Signing off. Peace.